Traders, welcome back to our price action trading lesson. We're looking at S&P 500 and mini futures. The time frame is 2000 tick chart. It's very similar to 1 minute time-based chart. The reason why we're using a tick chart is because it's a little bit more symmetrical and it offers more details. So we started with bullish trend working high. We had overshoot that generated a break and we expect new high to be tested. This is the area where the market opened and we're going sideways. So this is pretty much area of development, no clear bias just yet. This channel doesn't fit as well. We actually have a high-low breakout pullback, nice bullish bar, breaking out of the consolidation. Interesting setup. The price action for the most part is a little bit unclear. We're going sideways quite a lot, but because this uptrend may need to get new high tested, more aggressive trader can consider. But overall, it's better to wait for a little bit more information. And we're going higher, so it looks like we're about to test the new high. So I want to see second entry long at the exponential moving average, and prices just kept pushing higher. Double top was formed. With a new high first entry long, second entry long, of course I cannot go long above this bearish bar. As a buyer, I can only buy above bullish bar. So this is no good for second entry long. Signal bar is important. And market reversed down. So this is information from the market that bulls are considering this as new high attempt. Generally, you expect a high be higher than the latest highest high prior to break. But double top can be considered enough. This is close enough. And now because I can see market working lower, I'm going to redraw a downtrend. And I'm just focusing on the recent structure. Yes, I'm predicting some small consolidation because we're going sideways. As of right now though, this is not typical trend range. This is just the part of the uptrend because we had overshoot that led to a break and a new high. So this is part of the market cycle. But it's good to predict possible trend range in case it's going to hold. First entry short, second entry short would be ideal. However, there was only new low. One attempt, market created, push down. Can I fade a breakout? I cannot, because the signal bar is an inside bar. We didn't trigger below this bar. And also I can make a case for a slightly wider channel like this. You can see how well it fits. The break is so tiny. So I have bad two clues. It is an inside bar. It doesn't really act too much like a trend range, we explained, but more importantly, there can be just slightly wider channel. It's so close. I gotta be careful. I need to see a push above to start considering buying. Of course, that never happened. And downtrend is confirmed. Okay, great. So this is what we do as price action traders. We just follow these candles, look for these channels, and this is how we're able to predict what's going to happen. Because now we're predicting the bearish trend down, it's going to get new low. We're following the trend line rule. So I'm going to redraw the short-term uptrend. We have a first entry short. So I would like to see a second entry short at the EMA, something like this, pulling back, second attempt to test the new extreme. So you understand that the market needs to get new low. The channel has a lot of confirmations. However, the second entry short formed very sketchy because you want to see pullback to the EMA. If you're going to take it this far down, you know, many times prices will correct to the EMA. That's how it works, and then pull back. So even though context wise it worked, given the distance from the EMA and given the neutral signal bar when it comes to selling, I just can't mark it. We have to follow the rules. So perfect context, but there's simply no way for me to take it. Break a new low, so I'm going to pause looking to go short. Just because downtrend played out, it doesn't mean I can just blindly go long, okay? If you predict some reversal, you need to push above the EMA and reverse a pattern, the felt second entry short above EMA. Because you simply never know how many pushes there's going to be, if you're going to be in a consolidation or there's some wider channel, so let's be patient. I cannot sell because the downtrend played out. Clear break, clear push to a new extreme. And market drop lower like this. So I can see that this is significant trend down. After breaking new low, we have significant push down. We are struggling to break the EMA. So now I'm allowed to be drawing a wider downtrend because the price action is telling me the bearish trend has expanded. It is much stronger and it fits actually pretty well. We have small overshoot, so I'm going to right now expect stronger correction in the opposite direction. We have a lowest low, first entry short, pull back, second entry short. This is a tempting second entry short again, but the short-term uptrend is in play. There is no clear broad break new high. We have possible overshoot. Okay, can I go lower high? I cannot. And this low broke the low we use to identify overshoot, which means overshoot is not acting as overshoot, meaning it's not generating a break or reversal. So this is a sign from the market I can widen the channel. When overshoot is not acting as overshoot and the low is broken, it's not acting as overshoot and the channel is wider. So now the bearish trend down is confirmed. I don't have to be worried about anything because the downtrend is the main pattern. And as you can see, I want to see the two-legged pullback at the key entry point. This is where the correctional phase will end and the brand new push phase will begin. We have a second entry short again, but the signal bar is super neutral doji. It worked. So normally these setups are great to consider, this one and this one, but the signal bars today are just not cooperating. You know, it's important to understand that you want to sell here because next time, let's say in a few days or weeks, you're going to see the same downtrend. You want to sell these setups because the signal bar is going to be better. But today when I'm watching it, the signal bar is simply too bad and I have just no way to enter. But you need to study the market after the fact. You need to understand exactly what's happening, how to widen the channel. Overshoot is not acting as overshoot. The trend kicked in and you can sell the second entry short the next time you have a better signal bar. We have now first entry short, second entry short, but now it's too congested. It's neutral bar again, not even full at the EMA. We have 8 bars stacked right next to each other, so I gotta be careful. Market broke higher, and this is interesting. We actually have count reset. This is only first entry short, but this is failed breakout. This is a failed breakout out of this consolidation, and the trend is down, which needs to get new extreme. So we have 2 reasons to short. Not only expecting new low going to trend line rule, but expecting most breakouts to fail out of the consolidation. Okay, I was looking for the second entry short, lower high below EMA. I didn't take it, but it was a tempting setup. It follows the rules, so I'm gonna mark it. When the market is moving quite fast, you're forced to make a decision quickly. Unfortunately, I didn't pull the trigger. I was ready to go short here on a multiple test, but we broke higher. So you have to take the failed break. But it's a decent setup. You can see many reasons to expect market go lower, break, and the downtrend played out. So now I'm going to pause looking to go short. And because the downtrend was quite strong, right now we can have correction reversal, but I'm not going to jump into reversal quickly when the downtrend is strong. So I'm just going to patiently observe the area of development. Small break, new high. No good setup, nothing. I can't short, I can't go long. Market keeps working higher and we keep working lower. So I have uptrend break and new high. So I'm going to mark my new high, uptrend break and new extreme. 2 legs up. I'm going to redraw the downtrend. We have potential lower high, but problem is this lower high doesn't really confirm much. It's not confirming anything because the downtrend played out with a break and new extreme. In fact, if you have a downtrend in play, you can take it because you expect new low. However, in a situation like this, I don't expect new low because I already have a new low. So we only basically have 2 visual legs up, which is not strong enough confirmation. So don't get this mistaken. If you have break and new extreme, you cannot take it. If you have downtrend in play and you expect new low, that's one of the reasons that you can take lower high. So in this situation, when it looks bearish, because uptrend has 2 legs, I need a failed second entry long. The failure is a stronger setup, confirming the overall bearish bias. But we push back above EMA. By the time I get a failed second entry long, it simply formed too big. You can see you cannot go short below this bar. Stop loss goes here. So by the time you want to sell, look at the gigantic risk. This is simply too risky. Had it formed better, you can consider, but like this, a little bit too sketchy. Market is working low. I have 2 legs down. Now, I'm going to draw a channel slightly wider, like this, because we have break a new low, another push down, another push down. There is no bullish reversal because we have brought 2 legs up. So I'm going to mark 1 leg, break, second leg. Let's see if we get some confirmation or a nice setup. This was tempting setup. Once again, low is low, first entry short, second entry short, combined with small resistance. And it is a third confirmation of the trend line if I can tweak it just a little bit. Once again, super great context, tempting setup, second entry short combined with the resistant bounce. If this wasn't an inside bar, you can definitely go short. Uptrend played up with the break, push to new high. It is a third confirmation of the channel, which means confirmation. But you know, this is more aggressive trader because there is the inside bar. But the context is great. 2 legs up, market moves in pairs of 2s. Okay, we're correcting. Now, what I want to do, because we've been going sideways for quite a while, EMA is flat for quite a while, I also have a small consolidation, something like this, you can definitely see it visual acts as a trend range, break a new extreme. There is no reversal, so market cycle is dictating most likely some form of a correction phase, exactly as we expect according to price action rules. Of course, we cannot sell at the bottom of the move. You have another sort of failed breakout. First entry short failed breakout, but it's a little bit too low. It's a bit at the bottom of the move. It is a technically failed breakout. You still want to understand exactly what's happening, how market operates. Most breakouts will fail. You expect newell to be tested, but you know, you're quite close to these lows. Breaking extreme. Downtrend played out. So downtrend played out, and I can pause looking to go short, especially if we are in a trend range where all downtrends played out. Push above EMA is indicating possible reversal. We have a new low for its entry short, pullback, second entry short failure, and this right here is a failed second entry short reversal pattern. This is indicating the downtrends played out, trend range buyers at the bottom stepped in, and this is a sign for us to go long. Predict reversal. You need to wait for break above this bar, drop your stop loss one tick below the signal bar, and market keeps going higher. So this trade actually produced decent runner. What I'm gonna do, of course, it is a habit, simple habit. I always draw these trend lines. Every single move in price action is part of some channel. That's just how price action works. Sometimes the channels are bigger because the trend is stronger, it's expanding, but they're also shorter moves. I'm looking for channels all the time. I want to see two-legged pullback at the EMA. I want to see two-legged pullback at the EMA because the uptrend needs to get new high. First entry long, but there was only first entry long, so there was no way for me to enter. Second chart had a great entry, but no way for me to enter here. Break a new high, so I'm gonna pause looking to go long. Two legs to new high. I cannot sell. I would need reversal pattern. I would need some great failed second entry long below EMA. That's not happening. We're just chopping alongside the EMA. Can't go long, can't go short. Nothing here. Just congestion, nothing here. Market pushed higher. This is interesting setup because I can look back and I can draw some small spike in a channel pattern, something like this. We have spike in a channel pattern, break, push to new high, so uptrend played out. You can consider shorting at the resistance. It is not a horrible entry, but it is more subjective setup because it's not really like, let's say, second entry short or some local triple test. You're just overall selling at the top, but all options played out you can consider, but it's not super textbook. Lower high below EMA would be better. It still ended up working, barely one tick away from getting stopped out, and now it's unfortunately getting way too late. We have a new high, first entry long. There is a second entry short, first entry or second entry short, which otherwise, if it wasn't before the close, you can consider, but now it's getting simply too late. But once again, you can tell the market is going to go down. All options played out. Spike below EMA, resistance is holding, and this is where you want to sell. Market push lower, but it's simply too late. So this is the overall structure for today. Price action was very predictable. As you can see, break a new high. Downtrend started. You can identify there's a wide channel. Second entry is on the way down, but the signal bars were terrible. Break a new low. So we now need a little bit more information to decipher. We're going to enter a correction phase, which means trend range. So we're going to identify key levels. Secondary downtrend, break a new extreme. Reversal, break a new high. So price action is easy to navigate, but it was a very boring day. I didn't take any setup. Very few setups. Signal bars were terrible. Overall, the last few days, 2 or 3 days, were quite boring. Not that many setups. So if you're just sitting here and you can't find that many setups on the ES especially, you're not alone, so don't sweat it too much. I also didn't take as many setups because price action is rather slow and there's not as many setups where everything aligns. This is why you can consider incorporating other instruments as CL or NQ, even gold maybe, just to have them on the side. And if you see textbook setup there, you can consider taking a setup on many different instruments when the market is this low, because you can manage analyzing different charts. So yes, this is the overall price action. I'm gonna wrap it up. I hope you had a good trading day, and I'm gonna talk to you next time. Good luck in your trading.